Welcome back, everyone, to the deep dive. Today, we've got a bit of a puzzle on our hands with Bharat Bijli Limited, or BBL.
Hmm.
We're going to dive into why its stock chart seems, well, hesitant, almost doubtful, while its latest financials, they're looking really strong.
Yeah, it's a classic situation, isn't it?
Mhm.
You look at the stock's recent action, it fell hard, then just stopped. It's stable, but not exactly climbing.
Right.
But then you crack open these new unaudited results for the first half ending September 2025, and wow, the operational growth is definitely there. Solid numbers.
Exactly. So the market isn't quite buying the good news yet, it seems. Our mission today is to figure out why. What's the disconnect?
Precisely. And for you listening, the key question is, does this flatlining stock price mean there's some hidden operational weakness the analysts see?
Or is it just that the market's waiting for something specific, maybe a trigger to finally recognize the solid finances and, importantly, these big expansion plans we're going to talk about?
Let's find out.
Okay, let's start with that immediate picture of the stock chart. What's the story there? BBL is trading around, what, 30s 98 right now?
Yeah, about there. And looking back over the last year, it hasn't been pretty. The stock dropped significantly, lost about a third of its value. It's quite a hit.
A 33% drop definitely signals some sustained bearish feelings up until recently.
Oh, absolutely. For a good chunk of that time, the price was stuck below key moving averages, the 50-day and the 200-day. That really confirms the downtrend was serious.
But then something changed around May 2025, didn't it? The bleeding stopped.
It did. The stock stopped crashing. It just seems to have found a new sideways channel consolidating.
Boxed in, essentially.
Exactly. Boxed in. We see pretty clear support kicking in around that 3,000 mark. Seems like buyers step in there.
Uh-huh.
But then any rally hits a wall near 3,400. That's the resistance level. It just can't seem to break through yet. It's a real stalemate.
And the technical indicators, things like RSI, what are they telling us about the energy or lack thereof inside this box?
Well, they're basically saying the market's taking a nap. The RSI, the Relative Strength Index, is sitting at 46.31. That's dead neutral.
Right, in the middle.
Smack bang in the middle.
Yeah.
No strong buying momentum, but no panic selling either. Just flat.
So we've seen some of those candlestick patterns, dojis, hammers, bullish engulfing things pop up sometimes.
We have, but they haven't led anywhere.
Why not? Volume?
Exactly. The average trading volumes have been pretty uninspired. There's no sign of big institutional money stepping in forcefully to push it one way or the other. Technically speaking, BBL is just catching its breath after a long slide.
Resting.
Right. It's building a base. Until we see a decisive move with real volume behind it, either breaking above 3,400 or falling below 3,000, the chart's message is just wait and see.
Okay, so the chart is basically telling us to chill. Let's pivot then to the financials, the engine room. These are the unaudited results for the half year ending September 30, 2025. And this is where things get interesting, because these numbers suggest BBL should be, well, moving up.
Yeah, this is where the contrast really hits you. The operational stability, the short-term growth year over year, it's quite substantial.
How substantial are we talking? Give us the headline figures comparing this first half, H1 2026, to the same period last year, H1 2025.
Okay, so revenue from operations went from about 769 crores in H1 2025 up to nearly 938 crores in H1 2026.
Wow, okay. That's a jump of, what, roughly 22% in just 6 months?
Roughly, yes. And that's a significant acceleration compared to the whole of the previous fiscal year, FY 2025, where their revenue growth was only about 2%.
So 2% growth for the whole prior year, and now 22% growth in just the first half of this year. That's some serious momentum picking up.
It is, especially when you consider their longer-term growth. The CAGR between 2020 and 2025 was already a healthy 15%. So this H1 is really kicking it up a notch.
Did the profits follow that top-line surge?
They did, and even better. Profit before tax, PBT, climbed faster. It went from around 57 crores to 74.5 crores.
That's over a 30% increase in PBT year over year for the half.
Correct.
Yeah.
Which translates directly to better earnings for shareholders.
Yeah.
Basic earnings per share rose from 37.79 to 49.64 for the half year. It's a genuinely strong financial performance for the period.
Okay, so undeniable growth acceleration in H1, but the stock price is just sitting there. To understand why, we need to look inside the business, right? The different segments, where's the money actually coming from, and is something holding it back?
Right. BBL essentially operates in two main areas. You've got Power systems, think big stuff,
Mm-hmm.
transformers, substations, that kind of infrastructure gear.
Yeah.
And then there's industrial systems. This includes electric motors, drives, automation solutions.
And based on that strong H1 performance, I'm guessing Power Systems is the star right now.
You guessed right.
Yeah.
Power systems is really driving the growth.
Oh.
In this latest H1, it brought in over other 525 crores in revenue.
Okay.
And crucially, it delivered the bulk of the profit, about 73.6 crores in segment profit. Clearly, they're riding that wave of infrastructure spending.
But wait, if Power Systems is doing so well, generating that much profit, why are analysts still talking about overall profit margins being range-bound? That sounds like something's dragging down the average.
That's the million-dollar question, isn't it? And the answer seems to lie with the other segment, industrial systems.
Ah, the motors and drive side.
Exactly. It's still a significant part of the business revenue, over 412 crores, segment profit around 28.7 crores in H1, but it's facing some serious headwinds.
Competition, right, especially in motors.
Intense competition, yes, and significant pricing pressure. This leads to something the sources mention specifically, a decline in actual realization in the motors division.
Okay, let's unpack realization. What does that mean in plain English?
Sure. Realization is basically the average selling price the company gets for each motor it sells. So if realization is declining, it means even if they're selling more motors, volume-wise.
They're having to slash prices to do it.
Precisely. They have to cut prices significantly just to compete and win orders. So they might be working harder, selling more units, but the profit they make on each unit is shrinking. It really puts a squeeze on margins for that segment.
Got it. So the market narrative becomes, okay, great story in Power Systems, riding the infra boom, good margins there. But it's being partly offset by this struggle in industrial systems where they can't hold on to pricing power because of competition.
That's likely a big part of why investors are hesitant to push the valuation higher. They see this internal tug of war. They love the infra exposure, but worry about the commoditization pressure in motors.
Which naturally leads to the next question. If the motors business is under pressure, how are they managing to fund growth, and especially future plans? This must come down to the balance sheet.
And this is where BBL looks incredibly robust. Their financial foundation isn't just solid, it's like a fortress. As of March 2025, they were sitting on nearly 398 crores in cash and cash equivalents.
Almost 400 crores in cash. That's a nice cushion.
It is. And maybe even more impressively, they have very little debt. The debt-to-equity ratio back in March was tiny, just 0.09. They're barely leveraged at all.
So low debt, tons of cash, and their total assets have also been growing nicely, up to over 3,100 crores by September 2025. This gives them enormous flexibility, doesn't it?
Huge flexibility. It means they can fund ambitious plans without needing to borrow heavily or rely on fickle capital markets.
And they're putting that cash to work, aren't they? Investing it back into the business.
Yes, and strategically focusing that investment on their star performer, Power Systems. They're not just maintaining, they're expanding significantly.
Right. The big plan is to boost transformer production capacity, isn't it? From 18,000 MVA up to 28,000 MVA.
That extra 10,000 MVA is a massive increase. Just for context, MVA, megavolt ampere, is how you measure a transformer's power handling capacity. Adding over 50% more capacity like that, it's a major bet on future demand.
And it's not just talk, right? They expect this new capacity to be up and running fairly soon.
They do. The target is Q1 of fiscal year 2027. So we're talking early next calendar year, roughly.
And if you needed proof they're serious, you just need to look at the cash flow statement from these H1 results. You can see the money going out the door for this expansion right now.
Absolutely. The cash flow from investing activities clearly shows a big chunk of money being spent. Specifically, over 43 crores in H1 went towards purchase of property, plant and equipment, and capital work in progress.
So they're building it now.
They are actively spending the cash now to build that future capacity. It's a short-term cash outflow for a potentially huge medium-term revenue boost.
Okay, let's bring it all together then. We have this contradiction. BBL shows accelerating H1 growth, has this rock-solid balance sheet, and a clear funded plan to massively increase capacity in its best division.
Right.
Yet the stock is stuck. Analysts are apparently cautious about jumping in right now, saying it might be overvalued.
That seems to be the crux of it. The market, or at least parts of it, sees the stock as potentially overvalued based on current earnings and the margin pressures in the industrial segment. They acknowledge the potential, maybe, but they want proof or a catalyst before paying up.
They're waiting for something to change the story.
Exactly. Until that catalyst appears, the consensus seems to be it'll likely stay range-bound, bouncing between that 3,000 support and 3,400 resistance.
What kind of catalyst would do the trick?
Oh, it could be a few things. Maybe a really large, high-profile order win, especially for transformers, that validates the expansion. Or perhaps a broader improvement in the industrial sector that eases the pricing pressure on motors. Or even just a shift in overall market sentiment that starts rewarding companies with strong balance sheets like BBLs.
So, to recap for everyone, the stock chart shows stabilization after a fall, stuck in a range. The recent H1 financials show strong, accelerating growth, mainly from power systems. Industrial systems, motors, is facing tough competition, hurting overall margins. But the company has a very strong balance sheet, low debt, lots of cash, and is actively investing in a major capacity expansion for transformers.
That sums it up nicely, which leads us to a final thought, something for you to chew on.
Okay.
Given that the market seems hesitant, maybe calling the stock overvalued now, while the company is simultaneously pouring cash into this huge 10,000 MVA capacity expansion that's coming online soon, how long can the market ignore that future potential, that balance sheet strength, before that very expansion becomes the positive trigger needed to finally break that 3,400 ceiling? When does the future potential become today's reality check for the stock price?